the way in AI.
I have a very special guest, Mr. Vidura Gamini Abhaya, who heads the Solutions Architecture team at WSO2. I've been trying to get Vidura for Digital Cambodia for the past 3 years, but he's a very busy guy. He travels the world and talks to maybe hundreds, if not thousands, of customers all around the world. Mr. Vidura Gamini Abhaya to the stage. Vidura?
Thank you. Thank you, Shanaka, for the generous introduction. I hope everybody at the back can hear me clearly, yeah? Right, okay. Okay, so I'm gonna, like Shanaka mentioned, I'm from WSO2, but I'm not here to talk about WSO2 technology today. What I want to do today is basically share with you some of the things that we've seen working with customers around the globe, especially in the open banking space, what's happening out there. Has open banking lived up to its promise around the globe, so on and so forth, right? So I'll quickly get into the slides. I'm not sure whether everybody here is from the banking sector, so I want to first quickly establish what we mean by open banking and some of the core principles around open banking. So we'll start off with open data, APIs, and banking real quickly, right? So the concept of open data basically focuses on sharing data at rest using certain standards. So when you share the data using such standards, you may use a standard such as Open API specification, and that might be used to define the contract through which you share the data. You may also even standardize your payloads using open data formats like JSON, using JSON and so on. And then this information may be consumed on multiple devices by the consumers. And this information shared through open data definitely has a market value through productization, right? So that's what basically open banking really promises as well. One of the key concepts in, or rather when open data was mainstreamed as a concept, one of the key aspects that was established was the customer-centric data sharing ecosystem that comes with this. Basically, this is designed to give more control to the customers or the data owners. In this ecosystem, data holders such as banks, financial institutes, they share information through APIs with data recipients who can be fintechs or any other app developer. Before the data is shared with the data recipients, the data holders must seek consent from the end users, who are the owners of the data, right? And they do that first by authenticating the user, to obviously ensure who they claim to be, and then allowing them to authorize the sharing of data with the data recipients. So once the end user approves this, the data is shared, and then of course this authentication and authorization is also done through APIs, right? And the data receivers may use the data to provide certain fintech services, and obviously the end users benefit from that. Right? So this is sort of the customer-centric data sharing ecosystem that translates into open banking, right? But the key thing here is that this gives control of the data to the end user or the actual owner of that data, right? So some of the principles behind this whole process of sharing data. So the most important aspect is obviously transfer of that ownership, as I said, to the end user. And when actioned properly, the end users basically must and will have total control of that data. And we recognize basically 5 important principles for consumer permissioned data sharing. So obviously, firstly, the consumers should be able to grant or deny permission to their financial data in the context of open banking for applications and services. And the consumers should have access to their data and the ability to determine which entities or which application developers get access to what data, right? So they should be able to selectively pick the data items as well as who gets what. And then there has to be complete transparency. So consumers should know how, when, and for what purpose their data is used. And there has to be some mechanism for them to only share the required data for that purpose with the organization providing this service. So that's another very important aspect of this. And then, of course, all data transfers should be traceable. Consumers should have complete view of all the data and the data recipients involved in this flow. And a key aspect of this is also security. The data holders or the banks or the financial institutes need to ensure the safety and privacy of the data during this process of sharing, as well as when the data is at rest, right? So there's a lot of key principles around security also that comes into play within open banking, right? So these are some of the core principles in open banking. We more often than not focus on the data sharing through the APIs part of it, but what I want to establish through this is that who has control of the data and how it is shared, and the security aspect that comes into play as well in this whole process. Because when you think about implementing a solution in open banking, you have to think about all these aspects, right? So obviously when you're looking to either build a solution or procure a solution, these are things that you have to think about as a bank, right? Yeah, and then, so with all these data sharing principles at its core, open banking was born. So this diagram sort of, I'm trying to sort of show the evolution through the years with some key milestones and the contributors. However, the key principles that I highlighted earlier about customer-centric data sharing remains unchanged to this date, right? So open banking obviously started with the European Parliament passing Payment Services Directive 1, which was in around 2007. It focused on payments, was promoting online and mobile payments, and basically it was more towards greater collaboration across European banks. And then came the PSD2 movement, which was a lot more popular because that was the second revision of this. And it increased the scope to cover retail banking in depth as well. So along the same times, the Monetary Authority of Singapore, Association of Banks in Singapore brought the concept of finance as a service. So they developed an API playbook and an API registry, which registered APIs made available by financial institutions. It was revolving around account information sharing, real-time payments, and of course KYC or eKYC, right? So then Open Banking UK went active in 2018 with PSD2. Hong Kong Monetary Authority championed the Open API framework around the same time. So they took a sort of a phased approach in implementation. And then Australia started this whole process or joined this whole bandwagon as well, but they didn't want to even call it open banking. They called it consumer data rights movement, right? Why? Because they had a bigger vision in their mind when they started. They started this in 2019, and they focused on sharing customer data securely, again, through open APIs. And their vision from the start was to actually move beyond banking, right? So they started obviously with banks, and they're now already working on energy, telco, and healthcare already. They also take a phased approach, just like what Hong Kong did. And then on the other side of the world, Latin America also was working on this at the same time. So along came Brazil with their Fintech law, which again had a phased approach. And in the meantime, the PSD2 movement sort of came into an end in Europe and UK. But the next phase of it started where they extended it to mortgages, pensions, through open finance. So through all of this, basically open banking still keeps on evolving, and the open data movement still keeps on evolving as well at the same time. And they come in different forms. Obviously, continues on with the banking industry, but as I mentioned earlier, they are moving to other industries as well globally, right? So let's look at some of the global trends. As I said, there are multiple countries now joining this open banking movement in the bandwagon. Countries like US were a little late to the game, but they have started now basically come up with an industry-led approach with about 8 million, or I think maybe the numbers are up now since I got this stat. So they are now accessing services via standardized APIs called the FData or the Financial Data Exchange APIs. And they are pretty much moving away from rudimentary tech such as screen scraping that was, in the first parts of open banking tech that was around, used around the globe. UK obviously has moved leaps and bounds. So 95% of their now open banking solutions are screen scraping free. And about 100% of their accounts are now completely covered by open banking APIs. More than 1 million users now, more than 1 million use cases are there now in the UK itself on open banking. This has spread to now even in countries like Russia as well. They started their own thing as well before all hell broke loose there. Canada joined the bandwagon. Mexico joined it as well. And Brazil still continues to be the front runner in South America. Some of the countries, especially in the Middle East, Africa, as well as in Southeast Asia, just wanted to adopt something that has been already established. So most of them were quite happy to use a variant of the open banking UK standard that got them into this mix pretty quickly as a result as well. And then, of course, Korea, Singapore. So Singapore, Hong Kong, I talked about already, but Korea, Malaysia, Singapore all have a sort of a market-led approach. We'll talk about that in a little bit later as well to open banking. Japan is now into this mix as well. And as I mentioned earlier, Australia has taken huge strides towards this in multiple ways, right? So you can see this is a movement that is there in all parts of the world, and everybody is now looking at this in one way or the other. So it's natural that all the other countries also will have to, will do this at some point as well in the future, right? So what are some of these drivers around the world that we see for open banking, right? So obviously there are certain regions that are completely driven by regulatory bodies, and there are pros and cons about it. Regulation makes it mandatory for all the banks in that region to follow this. So they are given a deadline and they are compelled to meet this. Other than if they don't, there are penalties, financial penalties, and things like that as well. And in certain regions where it's not regulated, it's very interesting to see that there's a market-driven approach, meaning banks opt to follow due to a market demand, right? So this market demand could come from the consumers themselves, or them wanting to follow something that is more established, like I said before, the open banking UK standard. Especially in this market-driven approach, they do that because they want to basically have something that results in reduced friction, fair competition among banks, more collaboration between banks and fintechs, and most importantly, improved consumer experience, right? So they all understand and they have seen these things in other regions or other parts of the world, and they want to bring that into their own region, right? So then what is in it for Cambodian banks, right? Okay. Now, one key approach people take, or one thing that I have seen in other regions, some banks tend to think that open banking is like a necessary evil, right? For some people, it's like a villain. For some people, it's like a hero, right? So this is a character from, if you're a fan of Batman comics, this is a character called Two-Face, who in the comics is either a villain or a hero, depending on what you root for, right? So I tend to feel that open banking has something like this, right, for everybody. So open banking actually, as a concept when it was introduced, it was pitched to the bank not just as a regulatory requirement, but it was like there were a lot of discussion about a promised land, right? And the promised land was what was shown to them was that through open banking, you can attract more customers, you can collaborate better with partners, obviously in turn add more value to the customers through collaborations. And as banks, you can create new revenue streams through this movement as well, right? So if you're a bank you are still wondering whether this will lead you to the promised land, I want to give you some examples that open banking is in fact a hero, and then it can live to its expectation of delivering you to the promised land, right? So I'll start off with the first point. How do you attract more customers through open banking? So as a traditional bank, or maybe through traditional means of engaging with customers, you may currently have a certain part of the customer base in a country as your customers today, right? And you might use, you might have facilities for them to transact with you through branches, telephone banking, ATMs, kiosks, internet banking, mobile banking, right? There could be other demographics in your society for whatever reason you're not catering to them, or they are not coming to you as customers. Now, this is a scenario where by using open banking, you open up your data and functionality, and you partner up with a third-party provider of an application or another service that may already have or already may be appealing to the other demographics that you don't have access to with your current capabilities. But partnering up with a third party, you automatically get that benefit as well through the technology partnerships. And you don't have to just stop there. Basically, you can partner with multiple third-party vendors to get you more capabilities. We'll talk about that a little bit more in detail later on. And by partnering up and opening up your data or sharing your data with multiple partners, now you are able to cover a large portion of the population in your area, right? So that's one way that you can extend reach to other demographics in the population through partnerships. So open banking obviously mandates you to open up data in a certain way, and the open APIs deliver data in a certain way. And especially if this is mandatory, what is the value addition or what is the monetization that you can do on some of these? Now, the regulatory APIs are things that you must have as part of the regulation, which you have to provide without a fee, right? So obviously you may think that, okay, I can't get anything out of that because I have to anyway provide those at no cost. What you can do is basically you can actually have your APIs first give out quality data in a reliable fashion, and you will obviously see faster adoption as a result. And as more adoption comes, there might be new revenue streams that open up for you as well, right? So what you can do is you can go beyond the mandatory compliance requirements in small steps. For example, you can add additional capabilities to these APIs and charge a fee for that enriched data or the enriched API experience that you give. That could start off as some optional attributes being included if they opt to use your monetized API. And then later on, you can add more and more resources, API resources to this, to the same API route, to give more and more operations also to people who use it. And you can add new APIs on top of what is required for open banking to grow your API portfolio. So as an example, you can provide other capabilities or residual capabilities within the bank and offer them as an API. And the other thing is, like I said, there are certain standards through which these APIs are exposed. So standards are typically REST-based APIs and using JSON. But there's nothing stopping you from supporting other types of protocols and have different types of APIs and monetizing them. For example, you can give, you can use protocols like gRPC, GraphQL, and async APIs to give have more or a different experience or a richer experience for your users if they are being used. And those can be used by third-party vendors to build dynamic experiences for your customers. And those APIs obviously can be monetized. So obviously this can still lead you to a new revenue stream. So that's about the API space, how you can add value and monetize. Then of course there's also the data space, right? How you can add value there. So if you think about the amount of data that a bank has, banks, in my opinion, they sit on a treasure trove of data, right? And sometimes with the regulatory compliance, you are supposed to keep this data for a while. And all you have to do is now, say for example, if you take one transaction record like what I've shown on screen, you may have different types of transactions, certain properties about it. What you can do is you can remove the personal identifiable information on this transaction, de-identify it, and then use this data for various other purposes, right? So things that you can do here are like real-time credit scoring, smart lending. So these things, you can share this data in an anonymized form to other people and make money out of the data as well, right? So things that you can do with this, get the consumer buying behavior patterns through this, investment patterns through this, certain choices that consumers make, and certain business or relationships they have with vendors. So all of this information can be actually derived from the data that you already have. This can be another source of revenue for a bank and can be a great value addition, right? So that's another thing that a bank can do to make new revenue streams. Right. The other thing that you can do with open banking is basically you can reshape the banking value chain. So what I mean by that is this. If you're not using APIs, if you are not using open banking in any way, basically your value chain is you have customers, you have products, right? And you have different channels through which you provide these products or make them available to your customers. And so obviously banks take a sort of a do-it-yourself approach for this, typically by creating the channels, creating the products by themselves. And the products are delivered to the customers using, again, it could be multiple channels like through internet banking, mobile banking, and so on, right? If you start using APIs, even if you forget about open banking, just start using APIs, typically you would start using APIs internally first. And APIs are obviously, in that sense, used for internal integration, first of all. There might not be any integrations or data sharing with external parties here yet. Still, you're creating different channels and products here, right? what this will, so most of you who are present here might be in this quadrant today, all right, or in this state today. What this gives you is obviously operational efficiency and technological flexibility for you to maybe come up with better products, new products quickly. But it might not really give you that edge or the competitive advantage beyond the standard set of products that every bank offers, right? Now, bringing open banking into this mix, which means you're not only using APIs for internal purposes, but also to expose your data externally as well. Now, the moment you do that, what you're doing is you open that data set, or you can integrate into other partners out there that provide other types of products. And through the external integrations, you can easily make those products provided by those partners as part of your product portfolio and then offer it to your customers. That might be a really quick way for you to fill up a missing part of your product portfolio or bring in a completely new experience for your customers, right? That aspect can really give you an edge over your competition, right? So that can, as I said, that can create additional revenue streams. It can be an easy way to get new products to market, and can have a major business impact compared to where you are today, right? So definitely you can use open banking to reshape your banking value chain. Another interesting thing that you can do is provide banking as a service and through embedded, what I call as embedded banking. So you have the standard banking APIs that you already have. There could be other partners that are in different industries like retail, telco, energy, healthcare, and even entertainment, who have their own APIs, right? With open banking, what you can do is you can actually get into partnership with these individual industries or find partners in these industries, and you provide them with a banking as a service to these partners through these industries, and create highly specialized niche products. So what do I mean by that? If you look at the sort of the graph that I've drawn on this side, you have the number of customers and you have the number of products, which I'm kind of covering on my side, right? Traditionally, you might be having traditional banking products. You might have a lot of customers who use, who bank with you, but through the tradition, I mean, if you take yourself and another competitor, there might not be much difference between what you offer, right? Now, if you partner up with another industry and provide your banking as a service, let's take a simple example of payment APIs, right? Let's say you have a streaming service where people stream music or videos, right? Now you partner up with them and you have now a pretty easy way of paying for what they watch, right? Now you've created a product that is completely new and a completely new revenue stream for your bank, right? So all the customers, and the cool thing about it is that industry may have already a set of established customers. All of a sudden, all of them become your customers, right? In a quick switch by doing so, right? Why do I have these little boxes here, right? So this is what happens when you combine your banking as a service with each of these industries. You get these little niche products that you have behind me here. So how does a bank really make money out of this? If you only stick with one industry vertical at a time, you might not really get a lot out of it. So what you need to do as a bank is basically partner up with multiple industries at the same time and quickly release different types of niche products out there. And if you do that, you automatically get into multiple industry verticals automatically, and all of those customers in those industry verticals become your customers, right? So this is what we call as a long tail approach into making revenue, right? So you have a lot of small revenue opportunities that you go into and make money out of, right? So that's another way that you can create new revenue opportunities. So let's look at, so along these same lines, let's look at some of the business strategies that you can come up with open banking, right? So I've basically spoken about a couple of them already. On the y-axis, I have the banking product, basically whether it's internal, external, extends product portfolio to internal or external. And on this side, I have the customers, whether it's an internal or an external customer, right? If your products are, if your customers are internal and your products are also internal, that means the banks create products for their own customers today. That's probably where most of you are today, right? Now, if you provide banking as a service, as I mentioned in the previous slide, basically what you're doing is you're now partnering, so you're providing banking as a service, or banking products are distributed to customers of industry partners that you partner with, and you create niche products. So automatically you are now catering to a completely external set of customers that you didn't have before, right? Then another thing that you can do is reshape your value chain, as I mentioned in the previous slide. So the bank distributes own products and complementary products through partnerships to their own customers, adding value, right? So that's another thing that you can do. And there can be also a combination of them here, where a bank distributes own products and complementary products through partnerships, and also to partners to the own customers as well as partners' customers. So which means now you have even a bigger customer base here. So these are some of the strategies that you as banks can use from open banking when you plan ahead beyond the regulatory compliance, right? And if you are a non-bank who's like a fintech, there are a few things that you can do here as well in the top two. So as a non-bank who's consuming banking as a service, or a fintech that works with a banking as a service, distributing the products obtained through banking as a service to their own customers can definitely add value, because now your customers get banking APIs or banking services as part of what you offer to them. And that obviously increases their experience as well on how they can pay for what they consume on your platforms. Or it could completely come to this, which is like the ultimate thing out there, where a fintech or a non-bank distributes products obtained through another fintech, right, to their own customers through an API, right? This is a complete, what we call as a marketplace pure play, where you are reselling somebody else's product as an API to another party through a marketplace, right? So this is sort of a very advanced scenario that you can eventually move to and create a new revenue stream as well. Right, so some success stories from early adopters, right? I want to start off with some quick global examples. I want to present you with two scenarios where, so we spoke about improving consumer experience or the end user experience with open banking. Here are two examples, real world examples where that was done. The first example is from Australia, Regional Australia Bank, and this fintech called Basic. So basically, this is about somebody applying for an online personal loan for the first time after open banking was introduced. And a loan application generally, Regional Australia Bank takes days to approve that loan. But with the help of the fintech Basic or their technology platform, what they do is, through open banking APIs, the regional Australia Bank, so if I apply for the loan, regional Australia Bank uses open APIs to share my transactions with Basic, and that that platform analyzes my transactions and gives the bank a quick credit report about me, right? So in this example, the actual example, 3,000 transactions were transferred in a matter of seconds from regional Australia Bank to Basic. Basically what Basic did was, so they have a data analytics capability to analyze the expenses of the applicant, spending categories such as transport, recreation. They can categorize it and analyze it in seconds. And that allowed regional Australia Bank to make an automated loan decision based on a clear understanding of the individual's financial position and spending behavior. So something that they took days to do, now it was done in minutes, right? So you don't have to basically wait for days anymore to get your loan approved. That's basically the story behind this, right? This was achieved through open banking. Second example is from the UK. So this is once again a loan application. Basically, there is a finance aggregator called Funding Options that gathers up to 40 data points on how a company is performing. So in this case, the first company to obtain a loan through open banking was a beauty salon in Kent, right? So the loan was for 10,000 British pounds, and it was the loan was from Evoca, and Evoca basically was able to approve the loan in 83 minutes when the finance aggregator Funding Options basically analyzed all the data and provided them with all these data points, right? So once again, risk assessed, cash dispensed under 90 minutes. Again, something that takes days and months cut down to basically minutes, right? So all this wouldn't have been possible if not for the collaborations that happened between banks and the fintechs, and as well as if the consumers at the end of the day did not see a value of this, right? So it boils down to this, how you make use of open banking, as well as whether you can create something that an end user can really make use of and see valuable. That's the important message to take from this example. I spoke about making money through the data. Here's an actual real life example of that. So basically premium APIs. Here, this example is from BBVA, or a Bank of Bilbao, Spain. They have exposed a premium API called PayStats. This API provides transaction history with 5 main dimensions to improve customer behavior analysis. So basically, they take into account territorial unit, time, merchant category, gender, and age as the 5 dimensions. That gives, if you're using this API, basically it gives you insights about who is buying what and where, right? That's the additional information that you get through this PayStats API. Again, something that they've done beyond the standard open banking APIs and monetized it as well. We spoke about embedding banking to other businesses. Again, from BBVA, something that they've done. This is their banking as a service use case, where they basically allow or offer embedded banking to other businesses out there, through which people can do pay by installations, and things like that are quite popular these days when you buy something online. So that's another example from BBVA about embedded banking. A pure API play example here, ABN AMRO has a developer marketplace. Basically, they are advertising and asking you to try out their APIs, which they have productized and made it available, so that third-party providers can come in and develop applications using those APIs, right? And obviously, there's some clear business value in some of these APIs, because if you look at this, they are providing you with balancers and things like that in real time. So that means they are providing high value data through these APIs, for anybody who wants to use that. So these are some of the examples from the global scene that I can give you. Next, I would like to share a few of our own experiences. And in doing so, I want to first talk about, in general, what we have seen. One thing that I'd like to share with everybody here is, throughout the years since open banking was introduced, there was always a bit of a backward step towards sharing data, right? Don't be scared to share the data, right? The open banking movement and the security aspects that are around it are now developed to a state where you can do it very securely, and especially in a regulated area, technology can play a big part in making sure that it is done in a secure way, right? Especially if you are in a regulated region, just delivering the compliance doesn't grow your business, as we have already discussed already. So what you need to do as a bank is try to quickly adapt and try new approaches that, let's say, partnerships with others and things like, and other fintechs and things like that, that you may want to explore. When you approach sharing data through open APIs, don't look at it just as a technology strategy, but like I mentioned in a few slides ago, think of it as a business strategy. If you're using APIs, how do you make more businesses, or think about expanding your business in different ways through what you share through your APIs, right? And one key aspect of that is striking the right partnerships to shortcut the time to market, especially with the new products, as we already discussed, right? And then get the platform fundamentals right. Reliability and flexibility are key. A tailor-made solution like what you've seen from Mitra, both Mitra and Linear 6, can really save you a lot of time in getting there in a very quick time, right? Some banks opt to build the entire thing. Some banks opt to go with a partner and just procure something or acquire something, or have a hybrid approach where you build certain parts of it and acquire the other necessary technical capabilities through a partner, right? So some examples I want to share with you with our own customers are here. So we've got a bunch of customers who have used WSO2 technology to build new customer experiences faster. Obviously, that effort has been mostly on the API management front. So with using the API manager feature set, some of these banks that are listed here, a top 10 bank in Australia, international subsidiary of a big 4 bank in Australia, and Karnataka Bank in India, and a few more. Basically, they were able to enhance agility to respond to consumer needs. As I said, I've been preaching over and over again, reduce the time to market for new services, better utilize engineering talent in high return on investment tasks, right? So you can actually, when you use APIs, you obviously create an ecosystem that you can reuse some of the capabilities that you have, cutting down time and increasing agility, and better utilizing engineering talent. Right? So these are some of the examples that we've come across with our own customers in this space. And then if you talk about open banking as, directly, a few of our customers have opted to build their own open banking platform or use WSO2 to basically cater to that as well. So one of the top 10 banks in Australia has done this. A top 3 consumer-owned Fintech has done it. Top 3 building society in Australia has done it. One of the key banks that we work with even today globally is Societe Generale, which is the third largest bank in France. They have multiple entities across the globe in various types of businesses, from banking to car rentals to various other businesses as well that uses WSO2 for not only open banking but also for typical digital transformation projects as well. So Societe Generale was one of the first banks which approached us when they wanted to come up with a solution for the regulatory compliance part of it as well. And using the WSO2 platform, they were able to achieve that compliance, not only achieve the compliance, but also to enhance the customer or the consumer experience as well, using all of our products that are available to them to build that platform, right? So this is another example of where we have collaborated with some of the top banks in the world in delivering open banking success. And then the last one is basically harnessing the digital ecosystem to grow your business. Like I mentioned before, you can use APIs to monetize, some as a way of monetizing, and for you to get new revenue streams. Some of the banks that have worked with us have done this. Especially, they work with a lot of fintechs, third-party app developers to extend the banking experience to their customers in different ways. And just only with APIs they are able to do that too, and grow their businesses in that way, right? Yeah, so those are some of the experiences that I wanted to share with you, both globally as well as from our own customers. So some parting thoughts. I want to leave you with this summary that is here. So some of the key learnings I want to keep with you. Open banking is definitely the future of banking. It can be labeled open banking, open finance, or whatever. It's going to be there. And if you're a bank who's looking to either do it yourself or build a solution or get a solution for yourself, think about building versus buying, what works for you well. Buying a solution can definitely get you there faster if time is an issue. Building is also an option, but you have to have the right skill sets to do so. Especially if you're buying, or even for building for that matter, the right partner and the solution can get you there quickly, right? So if you're building something, you can use something like the WSO2 stack to help you with that. If you're looking for a solution that covers all the aspects of open banking, you've heard from two companies today about possible solutions that you can go with as well. And one key thing to note is when you take either of these directions, see what you can reuse. You may have certain systems already. See what you can reuse so that you can maximize your existing investments. There could be certain blockers with what you use today to achieve open banking compliance and go beyond that. But I'm sure if you work with a partner, you can definitely work around them and still keep using your existing investments. And especially in a regulatory area, my suggestion is to think beyond the deadlines. Don't try to build a platform that just gets you over that regulatory requirement. Use this opportunity to get all the right technology as well as the skill set that propels you to the next level beyond open banking. Think of it, when you think of it and come up with a strategy, always think of that aspect of what happens beyond the compliance. and make use or wider use of your investments. Those are some of the key learnings that I want to leave with you today. One last thing, what is next? What's the future? This is a diagram that I've got from the Open Finance in Open Banking UK. Open Banking, now they are already in the Open Finance. Basically what we are heading to, Australia, as I said, Australia is already here, but where the world is moving now is basically to open everything. So this is inevitable to go beyond banking to other areas like energy, healthcare, retail, telecom, government, and all of that as well, right? Some of the governments have already started doing this, opening up their data and collaborating with third parties. We work with such governments around the globe, providing citizenship services, helping them build this using WSO2 platform. So this is where the world is heading to. This is in my opinion, this is inevitable. When you think about your solution or your approach to it, always remember that there's something else coming down the line, and prepare for it. Thank you.
Thank you, Vidura. Going once, going twice. So, all right.
All right. Thank you.
Thank you, Vidura. And lucky for you guys, we've built the first custom open banking solution for the Cambodian market. And this will help you save 60% of your time, cost, and effort, right? And so you can focus on being competitive, you can focus on creating new services, and you can focus on creating better customer experiences for your customers.
Leading the way in AI.